Farmers and ranchers do not want to be controlled, and that much is clear from the resounding amount of views and 500 plus comments that were made on a 13-minute posted interview from Mary Jo's channel. That was specifically derived out of a topic that Mary Jo and Lacy ended up talking about. And Lacy, why don't you just share what that topic is?
So whenever I was down at Mary Jo's back in March, we did a podcast interview. And one of the hot topics at that time was the proposed regulations that are coming down the pipe from the CFIA as in regards to tracking and recording the movement of cattle in Canada. And so she asked me about that, and it's not a topic that I've spent a ton of time on and that I know all the details of. So I spoke kind of what had been shared with me, and that's kind of about it. But what came back loud and clear in actually over 700 comments on that 13-minute clip is that Canadians are ready to stand up, and they're ready to not be controlled. I've tried to get through all of these comments, but that's almost impossible. But it comes down to not wanting to be controlled and wanting to still have levels of privacy and freedom. And so that's kind of what has been looming over the past week is, okay, well, we're screaming that we don't want to be controlled, but are we doing everything we can to be in control?
Prior to getting online today and really talking about that, in meeting with one of our clients, it's the classic letting the nickel hide the dime kind of situation. And also lack of time, lack of bandwidth to really process when something is being offered to us by a lender. And so in the case of like, oh, hey, let me offer you a 0% interest loan for developing your crops, and let's go from there. And it sounds so great. And then what was the comment that the client made? Like, why shouldn't I just do this?
Right. So this particular client has 6 digits of a pool of capital built up within their policy, but not using it to operate. Instead, using some interest-free money from an association. And so his question to me was, well, why should I use my policy as my operating expenses when I have to pay interest over it, when I don't have to pay interest on what I borrow from this growers association? I said, okay, let's piece that apart. Let's dive into it. And I shared with him whose name's on the paycheck first.
Mm-hmm.
Like, who's at the first of the line when the income comes in? Is it you? And he's like, well, no, like they have to be paid first. When that crop is sold, they have to be paid first. And I said, so ultimately, they own your crop. Their name is on your paycheck long before your name is ever on it. Yes, you're not paying interest on the money that you're borrowing from that association, but you are giving up the control. When he's prepared what he has done and how he has treated his policy, he doesn't need their money.
Right. But again, it's like, oh, the bank has trained us so well that we just sometimes forget. We get so enticed with 0% and we think we're saving money, but we don't stop to think about that piece of control. It doesn't have a dollar value, but if we were stopped intentionally and asked, like, are you okay with this trade-off? It's not like farmers and ranchers don't understand. There's certain levels of risk if something happens.
And so then I went on, the conversation continued, and I said to him, if something happened where for some reason you needed to not pay back that policy loan, or it would be in your favor to not pay back that growers association right off the hop, let's just say something happened. You need that cash flow. You have the choice to not pay it back in your policy until you're prepared to do so. Let's just pay the interest on it, but leave that principal there. But with this other money, you've put their name on the paycheck first. And so no matter what life has thrown at you, you have to pay them back first. And that was a real eye-opener for him. And he's like, I have never thought about it that way. And I said, what about making them plan B? Like we always say, let's make the bank's plan B, but our system plan A. And I said, you are in a situation where you can make them plan B.
And this is why it's so crucially important to come back and listen to the stories that we have to share, because Lacy and I are going to continue to share example by example by example what it means. Because conceptually, everyone thinks, yeah, I get it. Like, right at the start, because he's been a client probably for 3-4 years.
6 years.
Oh, 6 years now, right? Time goes by so fast. But it's like at the beginning, the brain says, yes, I get it. This is what I want. But to actually really implement it, even 6 years down the road, like for this client, it takes a situation like this to still continue to open the eyes of what he set up for himself really does. Like when you really set up a pool of capital that you own and control, it's a gift that you sometimes don't realize you've given yourself until, a situation like this comes up and we're helping you to think through the benefit of it, value of it.
Yeah, reminding client. And this has been a conversation actually I've had a few times over the past couple of weeks with clients, just reminding them, hey, you realize you have the control of this loan. Strategizing is basically what it comes down to. Control isn't what you say you have. It's what shows up when things don't go as planned. That's control. Something didn't go as planned. You operate on your policy, the money built up inside your policy rather than on the bank's money. You're in total control. And control is what gives us the freedom.
Freedom is not a set of circumstances. It is also the absolute freedom of having money when you need it.
Yeah. And what does Mary Jo always say? Cash flow. Cash flow is king. I like what she says because she talks about Dave Ramsey and how Dave Ramsey teaches to have no debt and get out of debt. But what he doesn't teach is cash flow. You have to have cash flow in order to make your world go round. Like I listen to a lot of podcasts on money just because I want to be well-rounded and like hear different opinions and different philosophies. And I listened to one earlier today about what you have to pay every single month when you're looking at your expenses. If they're going to come knocking on your door because you didn't pay, you have to have cash flow for that. So if you don't pay your utilities, pretty soon they're turning them off. If you don't pay your mortgage, they're going to foreclose your house. Things like that. So if you don't have cash flow to service those things that, are not an option, well, your ship's going to be sinking real fast.
Really, at the end of all of this is we want to create the space so that we can enjoy life. So it's not so hard all the time. There's already a lot of hard things that we have to encounter, and all that to say that those hard things also help to shape and give us some gratitude in our life and some blessings in our life as well.
Yeah. So another interesting piece to that, I haven't finished listening to this podcast, but I'm going to, and I'll send it to you, Winnie. But another fellow talks about buying a cup of coffee. That's not what's breaking you. It's not knowing on average what you have coming in and what you have going out. You don't have to tell yourself you can't have the cup of coffee, but you need to know where your money is going so that you know how many cups of coffee you can buy if that's what you want to spend your money on.
Yeah, send it over to me. I'd love to hear it. If you don't have any overall awareness of what you got going on, then you have no business spending as you want.
For sure. When we go back to who owns the crop, like whose name's on the crop, it's like they get paid first. So they get paid first before you pay yourself, before you invest in your future or invest in your retirement in whatever way that looks, and before you decide what to do next. Before maybe you decide where you want to take your business next, they have to get paid. So they're coming before our own needs. Is that putting our best interest at heart? And maybe these funds have helped a lot of people get started. Maybe it is plan B for a lot of people. It's probably not all bad, but what did you give up in order to receive that money? Who owns the outcome and what happens in a bad year comes down to that.
And so to add to this conversation about it's not just the 0%, the trade-off is that you're giving up control. The other thing is Nelson's very first principles that we must understand is that we are either giving up interest to someone else, or we are giving up the interest that you could have otherwise earned. Now, in this particular case, because this association is offering it at 0%, it's not that you're necessarily giving up interest to the association. And it is control that they're giving up to the association. But back to the principle, it's like this client is giving up interest that he could have otherwise earned had he not financed it through his own personal pool of capital. And so that's great. And hopefully I can audibly lead you through this. But, if you get an opportunity to hop on to YouTube, you can see this visual. And I know I've actually showed this visual to one of our clients, and he actually saved it as his cell phone wallpaper.
Nice.
Just to remind him. So this is perhaps something that could be very useful for any of you to use as a reminder to keep this in mind. So once again, IBC is a mindset, and that's what we're really talking about, how we're thinking about things. Typically, when you're borrowing money, there's an interest that we pay to someone else. So we're in debt, and then we make these payments back until we get to zero. In this particular case, once again, we're at 0% interest. So it's not like we're giving up interest here, but pretty much receiving that money and paying it back, like as he's making the payments back, it's like he's using the cash method. He makes those payments, and there's a definite set of payments that he has to make, but he is giving up the interest that he could have otherwise earned. Meaning it's not like he's taking it and putting it in a high interest savings account at the bank, which is what, 1%, 2% these days. And so when you're doing it and you're financing it through the infinite banking method, you're really borrowing from your pool of capital. And as you're making a payment back, once you're done paying yourself back, the amount that you're able to now borrow from has increased than when you first started. And the reason for that has a lot to do with the mechanics of how the contract works. So as a reminder for those of you who are practicing this and have policies, I always test clients and I always say, what is the number one rule of the contract?
Number one rule of the contract is that the cash value and death benefit must equal by age 100.
Yes. So whether you actually borrow or not, that typically happens, but it's very beneficial that if you are going to borrow from yourself, that hey, once I pay myself back, there's actually more. It's like having my own line of credit that I own and control, but that limit on that line of credit continues to grow. And you're not going to get that from, borrowing 0% from an association. And you're certainly not going to get that from financing at the bank and making payments back. You're actually losing more interest that you could have otherwise earned by taking this deal than if you were to actually finance. And so I'd love to dive in with numbers because conceptually that's what that concept is. But perhaps we can do a special on that, Lacy, where we actually walk through some specific numbers to go through what I just talked about.
With this client, we are showing him the projected growth in his policy if he maxes out his deposit option this year. And then actually, it's incredible growth to his death benefit and his cash value that's accessible to him. And so, I would love to dive into numbers maybe in a different episode because we could totally pull up an illustration and do that. So it makes me ask the question, like, where else are we giving up control? If we so easily give up control in a situation like that, where else are we giving it up? Like, where do we have money borrowed from? It could be operating loans, input financing, equipment loans, grain contracts, government programs. And this is what this comes down to. Every time we use someone else's money, we introduce their rules. It's no different. Like if I loan money to one of my kids, I set the rules for that. I say to them, okay, well, what's your repayment plan? If you want to buy a dirt bike, then tell me how you're going to repay it. And so then I get to set those rules or negotiate those rules with them, which is pretty cool, but it does teach them stewardship. And if I'm having to borrow money from the family bank, there's rules that are set.
And just like no different than what Nelson always talked about too, he created a culture where, as soon as the kid was born, he's coming up the driveway with a contract for the parents to sign right away. And then it's like, so rather than an RRSP matching program, it's like, no, a policy matching program, to say like, I'm going to get a policy and then you, the parents, are going to get a policy on your kids. You would intentionally create a culture where each family member borrows from the bank and watches that family member to see how they behave with it. And it will determine whether they get another loan or whether they get to own their own policy down the road. And it's like, you pay back, you do good, you can borrow again. If you don't, I guess you don't. You know?
Yeah. And it was really cool to see at Think Tank this year, David and Lee. So David is Nelson's son-in-law. Lee is Nelson's granddaughter, and how, she accessed funds to purchase a new vehicle. And they had the picture of her getting the keys to her vehicle or whatever. And so, whatever it might be, maybe it's a tractor, maybe it's a piece of equipment, maybe it's a load of cattle, maybe it's some bred heifers. Maybe it's your fertilizer. We have a client who buys all of his inputs through his policy. And,
down payment on land.
Yeah, down payment on land. Like the possibilities are endless. And so in those comments on that YouTube clip, the general consensus is we don't want to be controlled. Stand up. It's time to stand up. But we keep signing up for things that control us, little pieces at a time. So I guess what we're here to say today is controlling your finances is a huge piece of the puzzle to experiencing freedom. Freedom in your choices, being less reliant on lenders. And so it's not to say you should never borrow money, because there are times when, yes, we need to borrow money and we need to make the bank our business partner, but we need to be a good business partner for the bank so that we can keep them as plan B. But it's just understanding the cost of control.
So where do people start if they haven't started with us?
So, we want to teach you what we teach in Farming Without the Bank and what Nelson taught in Becoming Your Own Banker is how to build up your own source of capital. And a lot of people, maybe that sounds really, really foreign to you, but it creates options instead of obligations. And so if you head over to our website, if you're a regular listener here, that's where you go. Head over to our website, ranchyourway.com. That's where you're going to pick up the book, Farming Without the Bank, or the book bundle. And you can get both. After you get those books, you can start asking yourself questions. Who gets paid first in my operation? Where have I traded control for convenience? If a tough year hit, who has the leverage? Do you have the leverage? And do I have any capital that answers only to me? And so you're going to find some answers to that as you start reading through. Your wheels are going to start turning. So we also are on YouTube. You can watch our podcast on YouTube. You can listen to us on Apple, Spotify, iHeartRadio. So head on over to the website. The book is where you start, but it is not the end.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.